In just 3 months this year, three semiconductor companies added more than $2 trillion in combined market value. That's not their total worth, that's the gain, the increase. To put it in perspective, $2 trillion exceeds India's entire annual economic output. That's wealth created purely from stock prices rising between April and June. Micron, Intel, and AMD rode a tsunami driven by one unstoppable force: artificial intelligence. Every new AI model, every data center running ChatGPT or Claude or Gemini needs far more chips than before. And suddenly the world realized chip makers hold the golden ticket to AI's future. Here's what most people missed. This wasn't about earnings jumping or profits exploding. It was pure anticipation. Investors bet that AI demand will keep skyrocketing, so chip demand must follow. The stock market moved first, pricing in scarcity and opportunity before reality arrived. For decades, semiconductor stocks were considered boring, cyclical plays. You'd hold them 5 years hoping for dividends. Now they are tech's hottest sector. The remarkable part: this happened while people asked whether AI progress is slowing. The chip rally screams the opposite. Here's where it gets interesting. It says demand will keep accelerating, chip shortages are coming. And these three companies are about to print unprecedented money. Semiconductors are the foundation of everything digital. Every phone, laptop, server, and AI system runs on silicon wafers made by these companies. For the past 2 years, the world faced a severe chip shortage that rippled across every industry. Carmakers couldn't manufacture vehicles without microchips. Hospitals rationed critical equipment. Data centers had to choose which projects got priority. Then the shortage eased and supply chains stabilized. But something had fundamentally changed. During the shortage years, cloud companies, OpenAI, Google, Microsoft stockpiled semiconductors, preparing for an AI arms race. They understood that training giant AI models requires massive computing power, which means GPUs, memory, processors. NVIDIA grabbed the GPU market, but AMD and Intel manufacture CPUs and server processors too. Micron makes memory. When shortages ended, manufacturers ramped up production. But here's what most coverage gets wrong: they realized demand wasn't bouncing back to normal levels. It was completely transforming. The post-COVID world discovered a new hunger: AI infrastructure. Chip executives looked at order books and saw something remarkable: an avalanche of demand lasting years, not months. And they realized something else that sent shockwaves through the market. This wasn't cyclical anymore. Demand was permanent and accelerating. When people talk about a chip rally, they're talking about stock prices exploding. But here's what confuses most people: the companies aren't suddenly selling more chips. Intel didn't ship 20% more processors in Q2. AMD didn't double their sales. Micron didn't find new warehouses full of memory. So where's the money coming from? It's called market anticipation. When a stock rallies, it means investors believe the company will be more profitable in the future than they thought last quarter. Imagine you own a lemonade stand. If you announce that summer will be hotter than ever, people will suddenly pay far more money for your business, even though you haven't squeezed a single extra lemon yet. That's a rally. Investors looked at chip makers and thought, AI is going to explode. Data centers will order chips like crazy. These companies' earnings will skyrocket in 2027, 2028, 2029. So they rushed to buy shares before everyone else figured it out. The stock price jumped from trading at 50 times annual profit to 65 times. The company didn't change. The outlook changed. That's how $2 trillion can appear in 3 months. Pure belief about the future. Here's the twist nobody expected: this entire rally might be built on if AI keeps accelerating, if data centers need as many chips as we think. Let's look at real numbers. Micron's stock price jumped roughly 50% in Q2. Intel rallied about 25%. AMD gained roughly 35%. Those percentages might sound modest until you remember that these companies are worth hundreds of billions of dollars each. A 25% move on a company worth $300 billion means $75 billion in new market value in 3 months. For AMD, that's like they invented a brand new, incredibly profitable business line out of nowhere. These gains happened because NVIDIA's so dominant in AI chips that everyone's desperate for alternatives. AMD's made huge progress. Intel's trying to catch up. and Micron supplies memory to everyone building data centers. So the market looked at these three and said, you three will own the AI infrastructure boom. Investors who owned these stocks in March were suddenly paper-rich in June. If you'd owned them for years, you might have doubled your position's value in those 90 days. Of course, this also means the market is now pricing in enormous expectations. If chip demand doesn't grow as fast as expected, these stocks could crater just as quickly as they rose. That's the flip side of a rally. And that's just the beginning of the implications. Is a $2 trillion gain in 3 months normal? Let's compare. The 2020-23 Nasdaq bounce when interest rates stabilized created a rally of similar size across many tech stocks, but that was spread across hundreds of companies. This rally concentrated on just 3 semiconductor makers and a few AI-related firms. In the dot-com bubble of the late 1990s, investors poured trillions into internet stocks with no earnings. That lasted 5 years before catastrophic collapse. This rally has fundamentals backing it. AI is real, data center build-out is real, chip demand is exploding. But historically, when stocks move this fast and this much, they're often overextended. The 2008 financial crisis was preceded by rallies in banking stocks. The 2020 meme stock rally in GameStop and AMC was wild but unsustainable. Smart investors ask, is this rally priced correctly, or are we getting ahead of ourselves? Here's the thing that changes everything. Semiconductor history suggests these chips are genuinely needed. The last major chip rally in 2021 before the shortage wasn't a bubble. Shortages lasted 2 years, but that was before AI exploded. We're in genuinely uncharted territory. Nobody knows if demand stays this strong or if it moderates. This is where it gets complicated. This rally has serious implications beyond stock prices. First, it means these 3 companies will generate enormous cash. When companies make record profits, they hire, invest in factories, expand research. So expect AMD and Intel to announce huge manufacturing expansions over the next year. More factories means more jobs, more supply, eventually lower chip prices. That benefits everyone. Second, it signals that the AI boom is for real. Wall Street doesn't hand out $2 trillion gifts to companies on a whim. These gains mean billions of dollars of actual capital will flow into chip manufacturing. That money will build new fabs, cutting-edge factories, research labs. Third, it exposes a weakness. If 3 semiconductor companies can see a $2 trillion opportunity, so can China and so can other nations. That's why governments are suddenly obsessed with chip manufacturing. They see the rally and realize whoever controls chip production controls the AI future. Fourth, and here's what worries investors, if demand slows even slightly, these stocks can crater. They're already priced for perfect conditions. 1 weak quarter could trigger a panic. But wait, there's something nobody's talking about. The rally might actually be underestimating the chip shortage coming next. Data centers are just getting started. If you're thinking about investing in chip stocks, here's what you need to know. First, these companies make money in cycles. When demand is hot, profits soar. When the market cools, they crater. So buying them near an all-time high is risky. Second, they face serious competitors globally. Taiwan's TSMC makes most advanced chips. South Korea's Samsung is ramping up. China's investing trillions. Competition is intense. Third, they are tied to the United States-China tech war. Regulations, tariffs, export bans could affect supply chains and profits overnight. Fourth, ask yourself if the expectations are realistic. Chip sales growing 50% per year for 5 straight years is possible but not guaranteed. The market's currently priced for that scenario. Fifth, diversify. Don't put all your tech money in semiconductors. They are volatile. And finally, remember these companies will do well if AI lives up to the hype, but they'll suffer if AI growth slows or if a new technology replaces them. And this is what nobody predicted. Sometimes the companies that benefit most from a boom aren't the ones that make the underlying hardware. Sometimes it's the software companies, the data center operators, the cloud infrastructure providers. Chip stocks were boring 5 years ago. Now everyone wants them. $2 trillion in 3 months. It's staggering, but here's what that number really means. It's the market's bet that AI will transform civilization the way electricity or the internet did. And that transformation requires chips, billions upon billions of chips, more computing power than we've ever built. The three companies that rallied in Q2 are the current leaders in that race. Will they stay ahead? That's the question. Intel fell behind in recent years. AMD caught up. Nvidia dominated AI chips, but now AMD is competing. Micron makes memory everyone needs. The competition is fierce and the stakes are enormous. This rally set the tone for the next decade of tech investing. It told the world that infrastructure wins. Data centers, chips, computing power, that's where the real money will be made, not in flashy consumer apps or trendy startups. It also told us something about AI's trajectory. The market doesn't panic when AI advances. It celebrates. Wall Street's convinced that AI will keep accelerating and that companies that supply the chips will profit massively. Whether that proves correct will define tech's entire next decade. Here's what this means for you. Keep watching chip stocks, keep watching AI news, because they are now joined at the hip. One drives the other. The AI revolution isn't coming someday. It's here, it's hungry, and it needs massive amounts of silicon to run. The $2 trillion rally was the market waking up to that reality. Follow for daily AI news.